Greetings guys, I welcome you in this wonderful video. So I'm just going to be speaking about pattern breaks, what you need to know and how to also understand them when it comes to taking your trades. So usually, let me just pull this trend here. Usually as traders, when we want to take a trade, we'll be taking a trade. Let's say the market is moving in a certain direction. For example, this one, we can see that it was moving down. Ne? So when we want to take a trade, we are always looking for the corrective waves. Ne? The corrective wave meaning the waves that are going against the trend, which are the waves going up. Ne? So when we spot the corrective waves, then usually I received a lot of questions on how to actually take your trades there, how to actually clearly identify a pattern break, because that's one of the methods that I use to enter my trades. Ne? So when you identify a pattern break, ne, there are usually the obvious patterns. For an example, the flags which are being formed, for an example, this one. They're usually these obvious patterns, but however, in the market you can find other patterns which are not as obvious as this one. Even this one, as obvious as it is, we find that we have difficulty in getting the perfect entry. So what should you do? Firstly, when you see the market starting to move against you, or when you see the momentum of the bars increasing, for an example, here you can see that there was a series of blue candles coming in, meaning the buyers were now coming in, because it was a moment the market was still dominated by sellers. Like in the few moments before the corrective, the market is still dominated by sellers. So then when you now see this blue candles coming in, you need to know that, okay, now it's the buyers coming in, and it might mean that it's a beginning of a corrective wave. Then your purpose as a trader, it is to observe how this structure is playing out, or how this corrective wave is playing out. So you should always pay careful attention to what is happening in this wave. For an example, we first received our high here, and then the market gave us a low here, meaning it was now clearly that, okay, this corrective wave is gonna give us some form of a pattern, meaning there will be some waves inside the corrective wave. So that's when you can begin to draw your trend line or your minor trend line, which will be below, because you can't draw that above trend line yet, because there is nothing to connect it with. So that's where you draw your below trend line or your lower trend line, and after you drawn it, you then observe what the price is gonna do. You see price pulling up, and once you draw your line, now your focus is on the breakout of that line. So you're focusing on when that line is gonna be broken out and how is it gonna break. So then when the market gives you another high here, then you can draw your second upper trend line. This is gonna be helping you to track the flow or the slopiness of the corrective wave. You'll be able to see if the corrective wave is slowing down or not, because people can say, why are we drawing the trend line above? Because we're interested only on this one. So, and then after you observe a breakout of these upper trend line or of this pattern, that's where you can begin to execute your trades. And one important thing, you need to make sure that it is now clearly that this thing is broken out. The safer way here is the safer method. The safer method is to always observe the previous low or the most recent low, and then use it as your final breakout or as your main breakout, instead of using the upper line here, because this line can always be disobeyed, meaning price can break it and then somewhere here price start to go up again. So it's better if you use the low, because if price break this low, it is a confirmation that, okay, now the sellers, they're getting stronger because they've broken the previous low, meaning they're getting stronger than the buyers. So that's another way. Then I want to make an example with this one. I want to make an example with this kind of a corrective move. So in this kind of a corrective move, usually what I say is that you should sometimes observe how the corrective wave is flowing. We can see on this one that it started stronger with a big candle, another big candle, and then the candles become smaller and smaller, and then finally price started to reverse. But one person can say, how can I detect a pattern break here? So what you should do, if you see something like this, remember, when you see an opposing move coming in, you need to pay attention on everything that is happening, because this is the move where you're going to be entering your market. So what you should do is firstly to mark your main point, which is this low, to mark your main point, which is this low. So people who are aggressive can enter the market from the flow that was broken here, meaning they can enter sales here from this breakout of the market flow which was going up. They can enter sales there, but it's a little bit risky because it's too early. So the safest place is to wait for your price to break your previous low, and then that's where you're going to be entering your trade. And one person can say, no, it's too late. It's not late, because you are trading with a trend. So a trend is likely to continue for a longer period of time. So this is how we should go about looking at pattern breaks or corrective waves in terms of identifying good entry opportunities. So thank you guys for watching this video.